Best way to trade strangles. Hey guys, this is Mehdi at Choosing Options, and today I'm going to show you how I trade strangles, as in I usually just sell them. So here we go. As you can see, this is the scan that I ran on today's Friday, May 11th, and I found roughly about 150 to 160 stocks. And let's go down the list and see your spiders. Oh, here is spiders. And the spiders volatility percentile is around 68. So I usually add 10 more to it. So I trade anywhere above 78 is good. Like John Deere and above is good trade. Okay. First thing I do, I sorted everything by the volatility percentile. You can watch my first video. It explains all of this a little bit better. The next thing I do is come to this column, historical volatility, TWX. The first stock that's looking good is this guy. Monthly is higher than 2 week. 2 week is higher than 1 week, so it's sloping down, and the implied volatility tend to follow. So it helps you in your trade when the volatility shrinks as you hold on to your position. Um, it says it's roughly about 90% of its own percentile, its own range. I mean, um, let's check it out. And okay, um, and it's implied it's consistently should be higher than the historical. 52 weeks is somewhere in the middle, so that's good. So everything looks good about this. Oh, the only thing is that I don't like about this is, wait a minute. No, it's pretty close. The standard deviation is pretty close to 1, but it hasn't passed 1. So this one is tradable. Um, the way I trade strangles, I use probability of in the money. If you don't know how to calculate the probability of in the money of any stock, um, or strangle, I mean, you take, well, a strangle is selling. I mean, if you want to sell a strangle, you sell a call and a put at the same time. So you take the probability of the in the money of your call and the same thing on your put, and you add them together, and that would be the probability of in the money of the whole trade. Now, if you don't know, or your broker doesn't give you that information, you can try to find the Greeks. Look for the delta of the option. Let's see if this is Yahoo. Uh, let's see, Morningstar. Okay, this guy I think will tell us what. Okay, TWX. Did I say TWX? Yep, TWX. So I usually trade the monthlies if you because they're more liquid. If I want to close it, I have no problem. But if you're a type of a trader that likes to hold on to your trade no matter what, you can do weekly. But I'll explain this in the next video for account management and how to protect yourself and all that. And I like to take profit or loss uh, on the same day that I place the order. I usually say 80% of this I'll take profit. If it goes against me, somewhere between 200%. If I trade it at, let's say, $100, and it's gone against me to, let's say, 253, I'll just close the position. I don't want to wait any longer. Uh, but we'll discuss that in a different video. Anyways, so let's go back. TWX. Okay. So basically, you find the delta 10 if you don't have if you can get the probabilities from your broker. Delta 10 is pretty close to 10% probability of in the money of the call side and the put side. So when you add them both together, it gives you roughly about 20. I like to go when my sweet spot is between 20 to 25. So a little higher delta is okay, maybe 12 on each side, but I don't like to go any higher than 25. So 20 to 25, a little bit lower or higher is okay, but that's the sweet spot. And how far do I go? I go about 30 days to expiration, and 30 at the most 60. The sweet spot is about, let's say, 30 to 45 days. 30 to 45 days. If you can't find a good trade, I'll go as high as 60 days, but not anymore, because the whole purpose is to use the decay factor of all the options. When you hold on to them, they decay. So the theta effect. So that's how I do it. Let's see. One important thing that I forgot to mention is the earnings. Um, you want to avoid earnings. So I came here. I usually go to earnings whisperer, but the site's down. I can't. But another thing you can do is come here to um, Yahoo Finance, and a lot, but I always go to earnings whisperer because they're pretty accurate. Um, so I type in the symbol right here, and it says July 31st. So that's like plenty of time. It gives you plenty of time, a lot longer than 30 days. If it's anything shorter than 30 days, I average on Strangles, I average about 27 days. That is, if I want to take profit at 80%. 80% profit, I'll take them up. Let's say if I sell it at $100, when it goes down to 20, I close the position. I want to close both sides at the same time. Call and put together. The whole strangle, close. Don't wait. Nothing. No games. The first day I place the order, and I place the order to close at that specific price. And as I mentioned, on the other side, if it's going against me, usually 2 to 1. Uh, but we covered that in some other video. Um, for whatever the reason, this Yahoo Finance for this symbol doesn't give me the whole range. Let's see. We are June 15. Let's see. I usually do monthlies 1, 2, 3. Okay, like June 15 is monthly. So good. But see, doesn't give me the delta. Let's go here and see. Okay, Nasdaq.com will give you that information. TW, let's see, that's it. Yeah, June. I went not done to July. Nothing's working today. Okay, here we go. I see delta on a call side, puts a call side 10, delta 10. See 7, it jumps from 7 to 16. So you can do either one's, probably this one. On a call side, I'll probably take a 100. On a put side, delta 10. It's jumping around. Maybe this guy right here. Gives you some room. No, this one. 11. Yeah, I would say probably this one. 86. Let's see what's the next stock. So that's how I do it. And that's, I've been pretty successful at trading it like this. Um, most of this stuff I learned from other traders who are very successful. I'm trying to get to there, but these people have 30, 40 years experience. And, I learned whatever I can from these people. Um, some of this information I'm giving you, it costs me money. So I'm giving it to you free. Enjoy it. But trade everything in a paper money. Get your broker and ask for paper trading. Trade as many times every day. Trade every day in your paper account until you get a hang of it. You'll know when you're ready. Believe me, if you do this strategy, it's gonna help you out. Oh, sorry, my girlfriend just walked in, so I had to stop the video. Where were we? Let's see. Okay, let's go to the next stock. A. I think it's Alcoa. I forget what it's A. But let's see. Percentile is good. Everything looks good. Yes, we got one. Historical volatility is sloping down. Yes, this is good. Standard deviation. So this is perfect. This is another good start. Now, before I do anything, I'll check the earnings on this guy. And let me go back to this guy, see if it's working. Hey. Oh, it's back up. Oh, May 14th. So it's too close. In about 5 days, 4 days, whatever. So I can't trade this because it's too close to earnings. So I'm just giving you an example of what you shouldn't do. So this is the one that even though everything looks good, earnings too close. So you don't want to trade this. Okay, next. BBY. Is that Bed Bath or is it Best Buy? Yeah, I don't know. Anyways, so basically the way you trade option, you should be neutral. Don't care about who it is as long as you get good volume. Like this is at least 2 million, so it's pretty liquid. Um, I don't care what they do, how much they sell, whatever. All this stuff you hear in the news, forget about it. Come here, look at the historical volatility sloping down. That's why we got a 1 here. Implied volatility tends to follow. This is perfect. Nice. Standard deviation in the middle, where we're looking at the price. Oh, wait a minute. Price is kind of pretty close to 52 weeks high. Anything above 95, I won't trade. So this one, no trade. Next, lows. Volume C 6 million, so it's pretty liquid stock. See, standard deviation is 1.85. If everything looks good, I put this aside for the next day or two. I follow this because when the standard deviation is high, could be some bad news or good news, whatever. I just wanted to settle down before you get into it. So I will write this, put it aside, look at it again later, next couple of days. But everything else looks good. Volatility is sloping down, implied is going to follow. Wait a minute. Yeah, 52 weeks. Yeah. So it's good, but hold on to it for a minute. Oh, by the way, before you do that, check the earnings. Hello. LOWSC. May 23rd. Ooh, that's too close. Forget about it. Let's go to the next one. So even though everything looks good, the earnings too close. All right. Did one. Okay, the next best one is gotta be this guy, CRM. It's not moving much today. Volume is pretty good. That's slowing down. Ooh, 52 weeks is too high. Forget about this one too. The next one is this guy, Costco. All right. Costco is looking good. 52 weeks. Ooh, it's pretty close to if you don't find anything that you have, but you really have to spray something, I would probably try it, but it's pretty close to the borderline. Standard deviation is good. Okay, how about the earnings? Costco and earnings. Costco. May 31st. Ooh, that's too close. Forget about this one too. All right, next one is that Citibank, Citigroup, whatever, CIT. Um, Volatility looks good. 52 weeks price range looks good. Standard deviation looks good. Volume is kind of low, but we'll see. Let's check the earnings. CIT. July, wait, it's unknown. We don't know about this one. Let's see what Yahoo says about earnings and this. Where did we go? Earnings. CIT. CIT. July 23rd, they say. July 23rd. This guy says 24th. So it's not known. If it's known, you should see a check mark here. So you want to go online and do a little research to find out what's the exact date. But at any rate, everything else looks good. So this is tradable if the earnings are not too close. You not gotta give yourself at least a month, maybe 35 days, because the 1 week, sometimes some of the stocks 2 weeks before earnings, their options don't decay much, so it doesn't help you. So, but like I said, I average about 27 days. After a while, you know what your average is, but roughly 27, let's say 30, 35. Earnings should be at least 35 days away from now. Okay, next one. GPS. Earnings look good. 52 weeks looks good. Standard deviation looks good. Volume is good. Everything looks good. But how about the earning? GPS. GPS. May 24th. Not good. So far, we got CIT and it was a TWX. So far, we got two tradable stocks. John Deere, okay, that's the borderline. That's the last one we got to look at because it's 10 points away from spiders. Or maybe I should say SPX. Well, this one's spider. 68, yeah, 78. If the volatility is a little lower, I like to go 15, but this is pretty high. All right, let's check out John Deere. Yeah, volatility is good, right in the middle on the 52 weeks. Standard deviation is good, very nice. Everything's good. Let's see what's the earning. Deere. May 18th. Nope, this one isn't any good. So CIT is one. TWX is another one. I think the lows was good too, but hang on to it for a couple of days before trading. Okay, so that's how you trade strangles, and that's the most efficient way to make to make money. Excuse me. If there's a better way that you know of, let me know. I'd like to hear from you. If you're having problems, let me know. I'm gonna try to do a market scan like once or twice, maybe if I get more response, maybe like every day per week, and post them in my YouTube channel. So come by, check it out to see if I have that day scanned or not. And if you want to add something to what I said, please let me know. I'd like to hear from you. And down the road, I'm going to do some more videos on strangles, on the trades that I did at that day or the day before or whatever, so you know how I did it. And then 30 days from now, I'll let you know how we did on the trade, you know, just just for you guys to get a hang of it. Well, happy trading, and subscribe or shoot me an email, however you want to do it. No pressure, whatever, I'll just try to put at least one video every week. So let me know if I need to fix something. Let me know. I'd like to hear from you. Have a nice day and happy trading.